Whenever stock markets start falling, there's this talk about buying during market dips, market dips, market dips. It's like an echo. But what are these market dips? So whenever there's a significant fall in the stock market indices, like Nifty has fallen from 18,600 in November 2021 to 16,200 levels, that's a significant fall. And as investors, we can take advantage of this fall because we're basically buying at lower prices. But for that, you need to have some money to invest in the lump sum way. You need to have time to watch the markets, and you need to be systematic about it. So the first point is that choose an entry point where you want to enter. So for example, Nifty is at 16,200. You may want to enter at below 16,000. Now the second is that you spread out your allocations a bit. So suppose I have 1 lakh to invest, I may say that every time the Nifty falls below by 200 points, I'll put in 30,000 rupees. So I'll put it at 16,000, then at 15,800, and then at 15,600, and so on and so forth. Now one has to remember that markets are falling and we are trying to take advantage. So you need a long-term perspective to wait for these returns to go up again. And don't stop regular SIP investments, keep that going, because that's the most disciplined and best way to take advantage of markets. One last thing which is very important is that these dips are caused by significant events like pandemic or the Russia-Ukraine war, inflation, etc., which could have an impact on our livelihood or on our cash flow. So if that is the case, don't enter now, hold on to what you have, let things stabilize, and you can always enter at a later date. The market will definitely give another chance.